Hello and welcome to another episode of FinTech Focus TV, powered by Harrington Starr, global leaders in financial technology recruitment. Head over to harringtonstar.com where you'll be able to see some of the greatest jobs in financial technology recruitment across the world. You'll also be able to find a host of insight to help you grow your brand, your team, your network and your career. You can see the latest financial technology salary survey. You'll be able to download the issue of the Financial Technologist, focusing on the appetite for disruption. And our latest Top 1% Workplace Awards will be out at the end of this year. If you work for a company that's a great place to work in financial technology, we want to hear from you. Enjoy the show, and I'll see you soon. Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. About a year ago, I was sat here with Duncan from TP ICAP. Duncan, how are you?
Very well, thank you. Nice to be back.
And we're back here again. In between, we did the Era of Convergence documentary as well.
We did.
And the industry, it's safe to say, has been through a little bit of a metamorphosis over that sort of time. We've seen the good, the bad and the ugly, and what I think is a really exciting time for it. And as we've just been talking about off screen beforehand, actually sort of plays into exactly what you've been saying all the time. Duncan, for those of you who watched the first piece, is probably one of the major players, the original players, the OGs of the of the TradFi and DeFi merger. And I think there's some really exciting things that you guys are doing over at TP ICAP. So we'll get into all of that. We'll talk a little bit about what's happened. We'll talk about where you're going. We'll see where the industry is, etc., etc. All of those interesting things about what's happening in the digital asset space that you run. But before we do that, just give everyone who didn't manage to see that a year ago, or maybe it's dropped off their radar. I can't imagine anyone would have forgotten the episode. But if they haven't, tell us a little bit about yourself and the story.
Sure, and as I said, brilliant to be back, and thanks for inviting me back on again. So I've been at TP ICAP my whole career, joined out of university on their graduate program back in 2008. Interesting time to join finance as the financial crisis was kicking in, so my first few weeks on the floor had a lot of best word for it is carnage across the market and across our trading floor in general. I worked for about 10 years on equity derivatives as a voice broker, and then sort of early 2017 stumbled across the Bitcoin white paper, got very excited about it. Our firm also was getting a lot of client interest about whether we were servicing products in Bitcoin or crypto in general. So our now CEO put a working group in place, and we ended up going onto the working group 2018. We went through a bear market a bit like we're going through now, and the interest in general across clients and our firm dropped, but there was a core group of 12 of us that were really passionate about the asset class and the technology behind it. And then over the next couple of years, we put together a business plan, got sponsorship and support for that internally. We're a publicly traded company, so made sure that our board were comfortable with what we were doing. And then sort of kicking off start of 2020, we moved across full time and have been building out the digital assets business since then.
I think it's really, we spoke about it last time, didn't we? But the sort of, I guess, the support of that from the board, was quite pioneering at that sort of stage. I mean, it always feels like crypto years are dog years, as we've spoken about before. But that sort of evolution, I don't think was a regular sort of place. So it's quite cutting edge the way that you were as a business doing it, and to have that group of you who were back to then build that was a great thing to see. And we've seen a rapid advance in the space from where 2020 sort of kicked off, and obviously at the back end of last year everything was a little bit more chaotic, and everyone sort of started to stumble a little bit. There was a lot of confusion, a lot of fear, a lot of trepidation about it. I guess the decentralized world suddenly got exposed very heavily. The traditional world suddenly became a little bit more into focus about how it could go through. Tell us a little bit about what we've seen. Let's start off with where it was at that sort of stage. We just finished the Era of Convergence documentary. We'd launched it. We had to sort of change it just as the SBF piece all came about at the end of last year. But it was still a sort of a fair concerned that this was an inevitability, just a sort of bump in the road, which probably was a necessity at that sort of stage, bringing more regulation into a space that had tremendous opportunity in it. We've spoken just before we came on about, did people blink? What was your scenario with it? What was the attitude of the board at that sort of stage when people were sort of, I guess, moving backwards and stopping investing in various different areas of it? Tell us what it looked like at the back end of 2022.
Well, a lot happened in a very short space of time, that's for sure. I think when you zoom out, the crypto asset class had huge eyes on it, and the amount of sort of coverage that it got across mainstream media, plus the sheer sort of volume of interest that came into the market through that 2021-2022 cycle. I mean, looking back on it now, what's clear is the infrastructure, and by infrastructure I mean the kind of exchanges, the custodians, the service offerers that were in the market were not fit for purpose for that volume of interest. And part of that was inevitable, in that when you have such demand come in and in such a quick space of time, it's difficult to build accordingly and ensure that you can handle that kind of volume. But it also really stress tests some of these providers in areas where they're weak. Alongside that, it's going through the courts now. It may turn out in various cases that there was, fraud and mismanagement of whether it be customer funds. But I think now, zooming back from that, it's clear that there are some principles that have evolved in traditional finance, which we've also learnt the hard way in traditional finance. And then had regulation put in to ensure that it doesn't happen again. That in crypto, that was just lacking to some extent. So there are some things like, and they're hot topics across the industry, and every provider's marketing department is shouting from the rooftops that these are the sorts of things they're now doing, like separating exchange from custody, so that you don't have that honey trap of being able to access customer funds. If you're a venue provider, maybe don't trade in your own order book, because there's a conflict of interest there, because you're always going to want to give preferential treatment to your own book. These sorts of things, we've put into place in finance, and there's actually regulation in place. And I actually think the regulation that's coming in off the back of this, things like MiCA, which is coming in Europe, I actually tangibly see now, when you're talking to sort of crypto firms, they are trying to get like MiCA compliant, for example, and off the back of that, they're saying, right, we're having to spin out our trading firm into a different entity. We no longer think that we can do this like this. And it's actually really heartening to see these firms having to adjust their business models off the back of this regulation coming in ways that will protect investors in future. So yeah, it was damaging for the asset class, for sure, because especially if you're slightly distanced from it, all you see is the negative headlines.
It's trust erosion.
But I think in the medium to long term, it's positive for the asset class that this shift is going on now, because it was still a very small asset class comparatively to traditional finance, and it was awful what happened, and a lot of investors lost money, and that is never good. And I'm glad that those things are going through the sort of legal process now, and hopefully money is returned to investors, etc. But in a way, for the overall growth, it's good that this evolution is happening now rather than at a later date. So from our firm's perspective, of course, there were questions asked. What's our exposure to these particular providers? Does this affect what we're doing in the market? And the important thing there is how sort of connected and in the loop senior management, the board, are with the business. And if you're only dropping in at moments of stress to check in what you're doing, you can react, I think, very conservatively and maybe in a bit of a panic. If you're constantly in touch with the business and you understand how the business works, how the model is different to maybe some of the models on the street, and much more tightly coupled, then I think there's less of a chance that your senior management panic, I think, in that instance. And certainly from our perspective at TP ICAP, we've had eyes on us as a business from day one, given we're a traditional financial firm. Crypto has had a checkered history, so we're very tightly coupled with management, and as such they understood how we've set up our business, and how this is actually beneficial for us, we think, in the medium to long term, because a firm with our DNA coming into the space should be the sort of place that gives investors confidence to access the markets.
Exactly right. And I think we're probably moving into that sort of medium term aspect of it now. Again, going back to that dog term, Pete. It's only a matter of months, but dog years is to where we sit. Pushing a year on from all of that, 10 months on from all of that sort of scene. We're sort of sat there at a moment where I think the summer has seen a sort of resurgence in belief and faith that this has actually been, exactly as you said, something that probably needed to happen with the industry, and cemented again that sort of whole need for more traditional financial structures and regulation and communication and setup and maturity to an extent. As you said, look, this isn't a high horse piece because it's been there before, as you said, in 2008 and years beforehand. But we're in a situation now where I think it sort of plays to this becoming a much more mainstream asset class, and a real opportunity to do everything that I think you visionary you in the visionary team that set it up saw as to this is how it can be and where it can go. So as we sort of start to move into 2024, looking at October the 4th this year, you're going to be sat with us talking about the whole thing as to whether 2024 is the year where institutional digital assets becomes mainstream. Give us a little snippet as to what we might expect you to be talking about on that day. I think I can probably guess where your thoughts lead with it, but
I think, and maybe we're not there yet in terms of really understanding what the narrative is in this next upcoming cycle.
Because it is cyclical, right?
It is.
There's been numerous hype waves of everything happening.
Yeah, and it's really important to remember that it's never as bullish as it seems at the peak of the market, and it's also never as negative as it seems at the bottom of the market. But in this last 2 years, or year and a half since the issue started happening, protocol development hasn't stopped. Products are still being built on the sort of base layer blockchain, layer 2s. Functionality is way more improved than it was previously, and the amount of sort of transactions, volume, general functionality that the DLTs or blockchains that digital assets leverage is way ahead of where it was in 2017 for sure. The question is, I think previous cycles have been driven by a lot of speculation that Bitcoin, Ethereum will become products or platforms that we can do a lot of things on, or will be utilized for, whether it's remittances, payments, some form of economic activity. But I don't feel like we've really got to a stage yet where that's actually being done, but we're starting to see the seeds of it now, whether you think of big corporates issuing NFTs to their client base and using that as a way to build long-standing relationships with their customers, interact with them a little bit more. And now, whether we've seen a lot of announcements, whether it's on Polygon or Ethereum, these corporates are having to have almost treasuries in crypto in order to facilitate their transactions on these layer 1 or layer 2 blockchains, where they give their customer an NFT that allows them to get access to a new product drop before somebody else, right? Or new trainers before anyone else can get hold of them, right? Airlines issuing NFTs as a way to get discounts on future flights or build customer loyalty. So things like that.
This was always the movement as well, wasn't it? When everyone was sat there talking about how do these pictures effectively, but the whole thing about NFTs was how it could become more mainstream.
Yeah, and that's really interesting because their sort of companies are using blockchains, but that isn't the main purpose for it. The purpose is customer engagement, and this is just a new tool for them to do it.
Yeah.
And then that's going to breed transactions on top of Ethereum or Polygon, more ownership because people need to hold the asset to pay the settlement fees to do these sorts of things. So I think that this next cycle will be driven by different parts of the industry, like the economy in general, starting to intertwine blockchains with their sort of daily purposes. Whether it's companies that manage FX transactions globally and have decided that by sending it on the Lightning network over Bitcoin, it's actually cheaper for them. Like they don't, in the nicest possible way, they don't really care that it's blockchain or Bitcoin or it's a really innovative technology. They care about getting their payments across borders cheaper, and they just see it as another service provider rather than using the traditional ones that we've used before. And that, like, let's not forget, that's why financial markets exist. It's financial markets are there to facilitate the economy, whether it's raising money, whether it's the transfer of energy and commodities for industry. That's why we have a financial market in general. So I think blockchain and crypto being used just as a byproduct of our general economy, and probably the digital economy first because it naturally suits that. But I think that's exciting, and I think that will drive 2024 or whenever the next bull market kicks in.
Yeah, I think the whenever is the inevitable part of it, right? It's not a case of if, but when. And I think there's some interesting things and signs which I'm looking at, which sort of give me the confidence about what we're talking about. As I said, look, there's I read in the papers today about Kevin Ellis, the PwC chairman, talking about how there's a lot of dry powder in the next 6 months. He sees people wanting to invest again, and there'll be more M&A activity in his predictions for the year ahead. And he talked about it in a 6-month cycle, which I thought was quite bullish and interesting at the same sort of time. Just before I went away on holiday, this isn't just a new makeup artist that we've got in here. There's a little bit of colour in there. But just before I went away, I spoke to Mark Beeston over at Illuminate, who was talking about their sort of continued passion to invest in their third fund into the digital asset space, which I think is encouraging. And we've seen, whilst some failures in the space, I think there's been an appetite. If you're looking at where money's being invested at the moment, it seems to be in that sort of area. Alongside that, you're seeing institutional money being put behind digital asset solutions, which I think is again a sort of very strong vote of confidence in the fact that this is a pathway which becomes an inevitable part of the future of financial services as a whole, I think. Yeah,
I think now is a better time to invest via equity into the space. Valuations are, or should be, down comparatively to where they were a couple of years ago.
Yeah, exactly.
And ironically, we've gone from FinTech-based crypto companies thinking they would acquire traditional financial participants to the other way around.
Which has always been the case in the FinTech evolution, isn't it?
Yeah, depending on whether you're at the top or bottom of the cycle. I think there's probably more of that than there is investing in the liquid tokens at the moment. And, I hear from sort of asset management hedge fund firms that they don't have inflows as much at the moment into investing in the spot assets, which makes you think that real price appreciation or movement in them, people aren't expecting that for a little bit. But I think it's just, if you're concerned about the asset class, go and look at some of the data providers that give you some of the more sort of blockchain data, like number of developers in crypto on different protocols. Every time we've had a cycle, the number of developers, they usually split it into sort of active daily developers that are focused on one blockchain or other ones that kind of do development work across different blockchains. But every cycle, the number of developers has gone up, and there's a bit of a tail off when we go into a bear market, but in general, most of them stay. Like that just continues to compound, and when you have a compounding number of developers working on blockchain protocols, the kit that we're all basing this on top of just gets better and better, and that just keeps chugging on a year-by-year basis. I mean, you saw Uniswap roll out Uniswap X, a new type of interface on top of their exchange protocol. That came out at the ETH Paris conference. They're not in the headlines as much, but these sort of tech stories coming out from the actual sort of development area just keep being churned out. It's just the eyes aren't on it at the moment, because we're in a bear market, and because people have moved on to AI.
Yeah. That's everyone wants to hear a bit of news about that, don't they?
Yeah, I see all the same new conferences popping up for AI that I saw about 3 or 4 years ago for crypto. That's the new popular topic.
Here we go, we're in. No, I agree with that, and I think it's speaking of hot topics, and you guys in there, I've been following what you've been doing over the course of the year, and I think there's been more and more positive, exciting sort of press and dynamics that you've been going through. When you talked about sort of scalability and the team and the company and the investment growing into what you've been doing. There's been some exciting stuff around that as well. Tell us what it looks like for you as a team, as a business. What's on the horizon? What's exciting? What's happening?
Yeah, we've tried to be consistent, not grow too fast, do one thing at a time but do it well, and insulate ourselves from the extremities of the mania, and just continue to build at a steady pace.
What I mean, I'm interested in that, because that's discipline, right? And I think it was, who was it? It was really, JP Morgan were talking about the sort of discipline to not panic and overhire or underhire at the peak of the market, and not and not get rid of everyone at the other sort of stages. There was something along those sort of lines, so don't quote me on the exact part around that. But I think the bit that was really interesting for me is to try and say, right, this is our route, and we're not going to. And I think it's a really difficult thing to do, and particularly in a space there where you've got enormous levels of hype at various different stages, and people trying to go on a gold rush, which they see those sort of things. What was it that gave you the sort of what seems to be a very intelligent long-term plan on this, as opposed to more speculator, there's gold in the hills, let's get after it, we need to run quickly, etc., etc. What was it, where did that discipline come from?
Yeah, it's a good
Nature,
question.
the founding team, because it's not a conservative business. TP ICAP's not been a conservative business over time. But it's established. I'm interested to hear that the reasoning behind the sort of because it's not a common thing in that space, right?
No, and I would question at the start. I don't necessarily know if there's a good or a bad or a right or a wrong way to build a business. I think it depends on the setup of the place that you're in. Say, for example, startups that hire, hundreds of people and then in a bear market cut that down quite significantly. I don't necessarily know that is a bad way or a wrong way. I mean, I think you have challenges with how do you ensure you have consistent culture if you bring on huge volumes of people at the same time. I would question how effective it is to build in sort of a aligned direction when you're going through like huge growth at the same time. For us, I think building slowly has been, potentially the way that TP ICAP just systemically likes to approach things. We think that blockchain and DLT will become a better way for financial markets, cross asset class, to transfer, store value. But that's probably going to take 10, 15 years to play out, like it took a while for electronification to move through asset classes. We're 20 years into that, and it's not, people are still talking about, fixed income markets are going more electronic. So you've got to pace yourself. And I think the way we've looked at it is try and have, in order to get to where you want to in the long term, you have to either have very deep pockets and take a massive bet that's only going to be realised in a long-term future, or you need to have short-term wins along the way. And then in general, I think as a company culture, we prefer to do things, not try and tackle too many things, but do one thing at a time, but do it really well, build customer trust, and then iterate and move to a subsequent product. So that's the way we've approached it, but I don't think it's necessarily a right or wrong way. Just it suits our company and our dynamics.
I think to me, it feels like the right way to go about it, because I think there's a lot of panic on one side, frenzy on the other, and you talk about it, in my mind completely correctly, that the whole thing about hyper growth in those sort of environments is very difficult to maintain a culture on something there that can swing very, very quickly in terms of a different direction. And I think the interesting thing about the discipline around that is that you said at the offset this is a 10 to 15 year play, and I remember being sat there 6-7 years ago in a conference where people were saying this is going to be a 10 to 15 year play, and then going to another one months later where there was a hype cycle around it and saying this is something you're going to be mainstream very, very much quicker than that. And so everyone then runs into that sort of scenario and pushes the panic button and says, right, we need to grow, we need to get more investment, we need to go through all of this sort of thing. Then all of a sudden, as you say, you haven't got the deep pockets and money runs out, or you're overstaffed and you think, right, it's not quite what we've got, we need to cut massive waves out, which is I can't think is particularly economically viable at the best of times at the same sort of stage anyway. So I like the idea that this has been, look, we have our bet on when this is going to happen. We have a plan in place to be able to do that progressively, and we want to, I'm a big believer in disruption coming through. People talk about disrupt or perfect, and I think if you're making sure you're really good at what you're doing, that to me has always been the most comfortable way of seeing businesses sustainably grow. And I think there's a really interesting part about what you do with that as well.
The only thing I know that is wrong is if you, in a bear market like we're in currently, where there's probably less confidence in digital assets and the vision that everyone's talked about, is if you stop or slow your pace because you end up trying to accelerate again in the next bull market, missing out on the year or 2 years progress that you could have had, or not getting to where you would have done, and then you try and accelerate during a bull cycle where you have to acquire or fast track or bring in people, and lo and behold, people cost more during a bull cycle. If you want to acquire stuff to try and speed up your development, then you're probably paying more for it because valuations go up. So I think however you staff it, I think it's just important to have that consistency through and understand that there's going to be periods of froth and mania and other periods where it's less in focus, but to try and be as consistent as possible through that, because it's really difficult to catch back up if you decide to stop things in that period. And that again speaks to what I talked about earlier, where I think it's really important that the business is aligned and tightly coupled with senior management, and senior management understand the timeline, the milestones, and have some forewarning on the fact that it's not always going to be rosy, because otherwise senior management are managing so many things, and certainly at TP ICAP this is a small part of a $2 billion revenue firm. So it's very easy for digital assets now to be out of focus and to be seen as, well, we've got bigger problems or bigger issues or bigger opportunities elsewhere. But unless you understand the long-term evolution and they're bought into that roadmap, then you can end up with decisions being made in a bear market that really damage your business.
I think that ability and discipline and confidence not to blink and to believe in the plan and the structure, and having that sort of communication piece all the way through it makes an awful lot of sense to me in terms of where it goes. And
it's highlighting the points where the industry has a similar data point to your view. So we now have, and making sure management see that, right? So in the last few years we've had big investment banks, so JP Morgan with their OniX digital asset platform, Goldman Sachs with their DAP platform, HSBC Orion, SocGen with Forge. You've had Supras like the European Investment Bank issue bonds on private DLTs like DAP or public blockchains like Ethereum. You've seen PayPal issue a stable coin. That one got less pushback from regulators than Facebook's Libra did back in the day. But these things keep coming, and they keep coming from not small fintechs anymore, but the world's biggest investment banks and big kind of tech companies.
There's a clue there, right?
Yeah, there's despite where valuations are currently in crypto, it's hard, I think, to look at all that and not think that there's a better chance now that we're right about digital assets than 3 to 5 years ago when there wasn't this same cycle of news coming from big financial institutions.
Yeah, there's a very clear appetite and a very clear structure, and I think it's just changed in terms of what they see the opportunity to be, and where it becomes a mainstream asset class that sort of sits along also like the other areas.
Yeah, well, I think banks now understand that this can save money for them from an operational perspective, and that's a big burden for them. And I think, one, if you look at the way markets settle currently, say particularly equities or bond markets, there's high levels of trade failure, like something like 10% roughly. There's late settlement fines, there's the capital management of holding cash at clearing firms or facilitating that settlement, not least staffing huge operational teams to kind of manage these processes. So being able to settle assets quicker, have greater utility of the assets, reducing trade fails. This is a use case that is really going to hit the bottom line of a bank, and it's not surprising that they are pushing this internally. And then also you think, meanwhile, you've got this kind of regulatory sort of narrative movement that's going on where in Europe and the US regulators are pushing markets to go T1 in order to kind of improve this side of things. And in general, market participants are saying, this is really difficult on the old stack, the old technology that we've used, that we've kind of built over the last 20 years. Like, how do we bring it to T1 when the technology in place is just really dated? Meanwhile, you've got sandboxes from like the EU with the EU DLT pilot regime, or in the UK with the digital sandbox, where they're saying, hey, please can you shorten markets to T1? We understand that's difficult and you're going to need working groups for the next 3 years to try and figure out a path forward. But also here are these sandboxes where you can test your markets on DLT tech, however you want to implement it, whether it's public or sort of private chains. And that tech comes with immediate precision settlement. So, when you zoom out, I think it's quite almost entertaining to see that, where you've got these two things in play, and it's the old technology, the new technology, and various different participants trying to work out how they do the same thing, which is reduce their operational costs, make the markets more efficient.
That's the beauty of it, isn't it? And I think tech has always been such an important part of this whole process, this whole movement, if you want to call it that. And I think, when you look at ever-increasing cost and ever-increasing pressure on that, and ever-increasing need for speed, efficiencies, optimization, productivity, all of those sort of areas, all of the key pressure points on the financial services markets, in fact, in terms of corporate life everywhere, this is an obvious answer to it, which is why I've got such faith in its future as to how and what it goes. And I don't think it's been as, this hasn't ever been for me just a crypto piece. This has been about a whole area where you can look at things and improve a financial services industry in the same way, as you said beforehand, electronification did with the markets before it. So I think it's a really, really interesting piece. As always with when I'm talking to you, I feel like we could be talking for 15 hours and get enough content for it. But let's finish up with a bit of crystal ball piece on 2024. You've alluded to it a little bit beforehand now, but tell us what we can expect from you. What's really exciting that's going to be happening in the marketplace, and what should we expect to be looking for in the year ahead?
Good question. So from our perspective, we've launched our wholesale crypto exchange, which is Fusion Digital Assets. So the next 18 months for us is taking that from start with a few pilot clients to a more of a fully functioning market like we operate across other asset classes. So that's exciting.
Definitely.
Building the team out, getting the new regulatory permissions in different jurisdictions and operationalising this wholesale crypto market.
You must be loving that as well, just from seeing it as this sort of thing of your baby sort of going through this. It must be such an amazing feeling for you to.
It's been a huge learning process.
But from a career standpoint, just amazing, right?
Yeah, it is. And myself and Simon, who co-heads the business with us, we've learned a lot. We're really enjoying growing a team, nurturing and building a team. And our senior management have given us a lot of flexibility to build it as we see fit, and that's great. I mean, how many times in your career do you get the opportunity in the growth sector to like really build something from scratch? Like, that's really exciting. And then we're looking now seriously as an organisation at how do we take that product and the things that we've learned there about interacting with public blockchain assets through our partnership with Fidelity, and how do we bring that to our traditional asset classes? How do we maybe look at our fixed income market or the FX market with stable coins, and how do we bring these new digital assets to those traditional asset classes that we run? And a key thing there, which I think is going to be talked about more moving forward, is how do you simplify access to these products for everyone that's in finance and trading markets currently? Because the one thing we hear a lot from clients is, that's great, it's a new asset and it's cheaper and all these sorts of things, but I need it to be in my existing trading systems. I need it to feed into my existing risk systems and portfolio management systems and all of this infrastructure that allows clients to trade and enter financial markets. And right now, these digital assets are just not connected to traditional finance. And that's not the sexiest thing to talk about, because you're talking about plumbing here and connectivity. But
it's the unsexy stuff that allows the sexy stuff to happen.
Well, yeah, I mean, the simple way of looking at it is you've had this crypto asset class, which is just sort of separate to finance, and now you're bringing crypto and other digital assets within financial markets, and it just has to feed into all the systems, reporting, etc., that clients use in general. But that's happening, and I see that on a day-to-day basis of people plugging that in now. So yeah, look, I think for us as a business, we start to get to the third stage of our strategy, which has always been bringing some of the benefits of DLT and blockchain to our traditional asset classes, and that's going to be a big challenge. But fortunately, now we've got not just management but the business heads across TP ICAP on the same page, understanding the opportunity.
They must be able to see it, right? It's and as you said, when you're able to present all of those positives to them, it becomes something they were saying, well, give me some of that sweet sugar. Yeah, and we're less like the crazy team in the corner saying, you guys knock yourself out with crypto. Now they're like, oh, okay, we kind of understand what you're talking about and why this is relevant for the rest of the firm. Pioneering, as I said, right, the visionary part right from the very start of this conversation. Yeah, well, that's very kind of you to say that. I wouldn't classify ourselves as visionaries, but we had a view and we're sort of midway through executing on it. So, well, look, I'm as a visionary myself, I know where it's going. It's been an absolute pleasure having you on the show. Likewise. And very much looking forward to hearing what you got to say on October the 4th as well. Thanks a lot for getting involved in that too. Yeah, it'll be a good event. And yeah, Duncan, a pleasure as always. Thanks very much. Thanks, Toby. And thank you all for watching. We will see you soon on an episode of FinTech Focus TV. Thanks a lot.